If rates go up, that's going to hurt longer duration tech stocks. But I do think that there's been somewhat of a reordering of the technology stack. And I'll give you kind of some interesting statistics here. If you look at what occurred in the Russell 1000 value index, Amazon is now 6.5%. Microsoft is now 4%. Apple is 4%. So Meta is there at 1%. So I think that the muscle memory of value managers of what is value and what is growth is really changing. And I think labels can be misleading. Value today looks very different because a lot of these large technology companies actually trade at relatively low multiples. I think they're more insulated.
You're saying Microsoft is a value stock?
It's 50% value as classified by Russell, and Amazon actually went from hardly any to 92% value. So it is a fascinating dynamic that's occurring. So I think that rates are probably going to affect those less than people realize. But one thing I'd say about rates, which I think is interesting, we are seeing rates rise today. And I hear a lot of chatter around, well, this is about the debt, this is about the deficit, or it's about inflation. And I'll just make one observation. Debt to GDP back in 2007 was 62%. And yields are back to where they were then, even though the debt to GDP is doubled. So it's too simplistic to just say this is just about debts and deficit, because rates are back to where they were, 18 years ago?
Rising rates here, we've been talking about it for the last several weeks and even more so in the last several days. How do you think about the value play relative to where rates are today?
So I think that when I look at the market, it's actually getting cheaper, Paul, which is a really bizarre thing. Now, we talk about the Cape. The Cape's higher. That's 42. So that's 1E. That's a 10-year E. But the forward multiple on the market today is closer to 20. So there's some really attractive companies. We're seeing a lot of growth coming out of the stock market today. I think that's a really interesting dynamic. If the growth continues because of the multiple compression in earnings, I think that the market is set up particularly well as we head into the back half of the year. Now, the big question is, can the earnings continue?
Right.
But I'll share one interesting stat because I was curious about this. Do you guys have a guess? What percentage of the S&P 500 issues guidance?
Issues guidance.
Issues guidance. Any guesses? Annual guidance. Any guesses?
60%.
Close. A little over 50.
Okay.
So a little over 50. So all these analysts are clustering, around what the guidance is. And management's doing their best based on suppliers, customers, to showcase that. So forward earnings are not just analysts sitting in a room just saying, hey, I think they're going to earn this. That's the best prediction based on the market dynamics, customers, supply. Now, of course, exogenous shocks can come. But I think the earnings growth, the reason the market's been so resilient in the face of higher rates is I think the earnings power has been higher than the cost of capital. And that has created a really interesting dynamic for equity investors, because usually it would be a tougher period if you see bonds selling off.
Small caps. How do we think about small cap stocks these days?
Well, the small cap trade has broadened. We've been bullish on small caps for some time. Small caps went through an earnings recession. We didn't have a economic recession, but they went through an earnings recession. They had 2 years of basically negative earnings. They were really negatively impacted by rates. Okay, they were really negatively impacted by inflation, and the reordering of the supply chain hurt them more than the big tech stocks. So as we've seen that normalize, we've seen a lot of recovery in these. I think we have a long way to go. They're trading at just 15 times earnings on average. And you're still seeing a lot of really positive revisions out. You have small caps growing at over 20 now. So I really like the space.
One last question. What's a constraint on growth in Texas? What's a constraint on growth in Dallas?
The constraint on growth in Dallas, that's a great question, Tom. I think
Water?
Dallas. I think it's a really interesting question.
Electricity.
I think electricity is an interesting answer. But one thing I would say that's unique to Dallas relative to Houston and Austin.
Please.
Austin has a lot of topography.
Democrats.
Well, yeah, it does have Democrats, but the topography is set up and the structural infrastructure is set up where it's difficult for it to expand. Houston doesn't have the same zoning. Okay, Dallas is set up for growth. I don't think they built it this way initially, but it's set up for growth. So I don't think the constraints for Dallas exist to the rest of the state the way it does. So I think Dallas is set up for a lot of growth. You need to come down.
Yeah.
Come down to Texas.
I could just see a remote from Dallas.
Oh, yeah.
You would look good down there. You had Gary Allen playing a minute ago. I mean,
And Gary Allen played.
I mean,
got that right.
Yeah, I mean, we got some good country down in Texas. So
That's great.